So I got the charts here for you guys. GBP, JPY, 15-minute time frame. And once again, we're gonna find consolidation in the markets, all right? Now, consolidation is just like a channel. If you watch my last video, you would know that it is when the market bounces off of two specific areas and doesn't break those areas. And when it does break either one of those areas, you can take your trade based buy or sell off of what the market decided to do, basically. So let's see. And one thing I would say, don't get this mixed, this right here, don't get this mixed up with consolidation. I would say it's really building resistance right here. Like for this, I would just draw a resistance line and that's it. I wouldn't mark the consolidation. You could, but I wouldn't do it. It makes no difference in that scenario. All right, so I got some consolidation marked up for you guys right here, right? Ice cream sandwich, whatever you want to call it. Okay, so the market came up in here and made wicks off of the top of this line. Then it came back down to point B. This is point A. It came up to point A, came back down to point B, and came up to point C, but didn't break it. I will mark that as consolidation from that point on to see if the market stays inside of it. And if I did that, maybe you might get faked out, but you can't really avoid fake outs in the market. So you just basically got to take a break and retest. And I'll do a whole video on break and retest later. But the market came out of it a little bit, but it didn't break too far under it. It came right back into it, hit the top, came back down, made a head and shoulders pattern right here. A very small head and shoulders pattern, but this is a head and shoulders pattern. Made two dojis and another blue candle coming up and shot right back in. If you're trading lows and highs, you can take entries off of each one of these parts. Don't rush it though. Wait to see what it does. If you feel like the market's gonna come back into the consolidation, then you can take your entry and ride it back up to the top of consolidation, and you will have another confirmation to do that based off of this right here. Boom. Market came right here, stopped and went up. That's a demand zone right there. That is a pure demand zone right there. And this is how I mark up my demand zones. I'll do a video on supply and demand too. I love supply and demand so much. It's very important in my trading. So I'm definitely going to share with you guys the way I do it, all right? I don't do everything like how everybody else does. Right now, I'm just doing basic beginner videos, but as I go along, I will get way more in detail about what's going on in the markets, fundamentals, technical analysis, and everything else that goes on that has to do with the market. All right, I'll get into it all later. But let's take baby steps for all the beginners out here, because I know there's a lot of new traders that's coming in too. So you take your entry based off of it coming down to this demand zone. All right, now I'm going to mark a long position right here after this blue candle. When mine stops right under this level, right under, and then I'm reaching to the top. I will have to reach pretty far back up though to make a 1 to 2, because what I take, so I probably wouldn't have even took this trade, because I gotta wait for a market to break resistance just to get to my take profit. And I don't really like to do that all the time. I'm a scalper. If I see the setup where it can, then I will. But for the most part, I'm trailing my stop losses and I'm getting out. Or if I feel like it's a 1 to 1 or it's less than 1 to 2, I'm just not getting in at all. So, yeah. But another way you could trade this consolidation is when it comes back down, it goes up, shows bullish momentum, comes back down a little bit, barely. It's making all these small red candles down. It's like trying to fight its way back down through the bullish movements. So it gets back down to the bottom and it builds support right at the bottom of consolidation, which is already support. It's like damn near double support now. So you can take your entry hoping that it doesn't break that. You're never guaranteed. It might just break it and shoot all the way down. It might just break it and come back in and go to where you want it to go. But that's trading. That's what comes with trading. As long as you're not risking too much, then you'll be all right. So you'll take your entry, long position, right here after the move, after the bullish candle, the big bullish candle. I don't like the small one. And we're looking for 1 or 2s, man. We're looking for 1 or 2s. I don't need to reach the whole top of that. I don't need to reach all that. I'm looking for 1 or 2. With my stop loss right under this. Stop loss right here. I don't want my stop loss up here. And I don't want my stop loss all the way down here risking too much, because if I risk too much, then I can't even allow my rewards to be enough to cover my risk. And that just doesn't make sense. That's a recipe for disaster in trading. So don't do that. Please, guys, don't do that. Let's look at another example real quick. Actually got 2 back to back. Let's snipe them out real quick, all right? Okay. So we got the market coming down into consolidation, breaking up, playing around, coming back down, and shooting right up. What would we do with this? How would we know that this is consolidation? There's a lot of questions that you can ask, right? Okay, so the market comes down, right? And makes a doji, and then makes a big candle coming back up, and tries to push back down towards where that doji was, but didn't make it, and end up going bullish again. So now we know that we have basically a support area. It comes up, it wicks off of this, almost making like a Harambe pattern, and comes back down a little bit, goes back up, comes all the way back down. Probably confusing everybody, faking so many people out. People are probably taking so many trades or getting out because they feel like they don't know which way it's going to go. I've done that. I know how it is. You just gotta pick one thing and stick to it. If you lose, you lose. Stick with your guns no matter what. You get to the bottom of this and it comes back up again. Now you can take your entry because you know that the market isn't trying to break this at all. It's not trying to come back down and fill this wick or nothing. So I would take this entry right here and ride it back up to the top with my stops right under here. So let's do it. Long position right here after this candle. And I'm putting my wrist right under these. Right under them. And this turned out to almost be a 1 and 2. Nope, I don't like it. You can take it. You can ride it up to right here and make it a 1 or 2. But I just don't like to try to break resistance all the time when I'm trying to buy from a lower area, right? And if I would have trailed my stop losses on that trade, I would have won less than what I would have originally won if I would have just stayed in the trade. So, pointless. All right, the last one. The market's coming down again. Reaches into consolidation. Now this is super choppy. I wouldn't trade this at all. I wouldn't trade this at all. I'm just saying, look at it. It's ugly, but you could. It's very possible. You know, you probably wouldn't get any full 1-to-1 trades or anything like that, but not yet. Probably you'll probably only get 1-to-1 trades, but if you trade 1-to-1s, then you can do this. I don't even really trade consolidation anyway, but you can. So if I would take any entry just based off looking at this, if this was the live markets, it would be so much different. I wouldn't take it. I just don't like all of this right here. This right here just looks horrible to me. It looks disgusting. But Yeah, it comes out here like this, and it almost make like a fallen soldiers pattern, but it doesn't complete it at all. So guess what? You watch what it does. You see what it does. You don't take the pattern thinking that, oh, it's gonna make this pattern and shoot back down, or it's gonna make another pattern and shoot back up. No, you wait. You wait for it to hit one of these areas. If you trade right here, you will be trading in the middle of this, and it, regardless which way you're trying to trade, you're not gonna make money unless it breaks. So you gotta get it right at the top or right at the bottom. So yeah, you come right here. You see all these dojis, and it start dropping down like this. When it start dropping like this, you get in. Like how big this candle is, I can tell it start pushing pretty fast. I can tell it start pushing pretty freaking fast. And it dropped below all of these anyway. So I'm taking my trade after it breaks these wicks right here. Right after it breaks those. For a short position. Hold up. Short position. Bam. Stop loss right above here. Take profit right down there, and that is almost a 1, 2, 3 trade, guys. That is what we are looking for. That's beautiful. Just like that. Just like that. And that is how you find and trade consolidation in the market. One more tip for you guys: when I find consolidation, I mark it up based off of how many times the wicks have hit that line. Like I try to use the most hits of wicks on the line and the most momentum coming from that area too. You have to use a lot of momentum from that area, but the wicks definitely help keep it more like, you know, more accurate. So see how many wick hits you get and then line up your consolidation like that. Like I have one wick that hit it right here. I have 1, 2 wicks that hit it right here, and 1, 2, 3 wicks right there that hit that part. So let's see how many we have up here. We have 1, 2, 3, 4, 5, and almost 6. That's a good way to figure out your consolidation. If you look back here, it's even clearer. There's even more wicks just straight touching. But that is how I find consolidation. That's my way of doing it. Please take everything I say with a grain of salt and use it to the best you can. Like, don't play with these rules in the market. You gotta have a strategy. You gotta have a certain setup that you're looking for, certain time frame that you're trading on, and you gotta come in, be robotic, but attack the market, and don't be scared either, right? So that's it. Thanks for watching. And if you got any good information from this video, please like and subscribe. I'll see you guys in the next video.